Now, if you're a sentiment trader, the chances are you're getting your signals from a variety of sources: tweets, LinkedIn posts, Reddit threads, breaking news headlines, or maybe your favorite macro newsletter. You'll focus on the now, not digging through the past. But what if I told you that seasonality, yes, those historical patterns of financial instruments, could quietly boost your win rate, even if you're trading off hype, headlines, and heat? Well, that might surprise you, but there are a few powerful ways to combine seasonality with sentiment to confirm, hedge, or even improve your entries and exits. So first of all, let's look at seasonality as a confirmation tool. Let's say it's October. Oracle stock is picking up momentum across social media on TikTok hopes and AI hype. Analysts are starting to turn bullish and the narrative is perhaps shifting. You like the setup, but before you jump in, you check Seasonax and just look at the seasonal data. And what do you find? Look, there's a consistent outperformance in the first part of Q4. You see, you can see an average return of 6.52%. Suddenly, your sentiment-based idea now has a historical tailwind. So now you're not just trading on sentiment or fundamental outlook for the stock, but you've also got a newfound confidence backed by stats. The second way that sentiment can be enhanced with seasonality is using seasonality as a risk filter. Sentiment can drive some really great trades, but it can also lead you into traps. And one of the most overlooked benefits of seasonality is using it to spot hidden downside risks. Right? Maybe you're long a name that's trending on FinTwit. Maybe there's the latest hype around Tesla, and you want to see, well, hang on, where is the historical drawdown profile? So you can see in this seasonal pattern I've highlighted, look, it's got a 73.33% winning trade percentage, very healthy, and an average return of 8.37% over this just 1 month window in October through to November, from the 25th of October to the 25th of November. But when you look at the drawdown, you can see what those maximum drops are. And all of a sudden you see, well, hang on, there's been maximum drawdown here, 28%, 24%, 10% drawdown. And one thing that I like to do is look, what was the maximum drawdown where it was still profitable? So you can see the maximum drawdown where it was still profitable looks to be at 9.79%. So that's quite helpful to see that if there's a drawdown of more than 9.79%, it has never been profitable, if I've got that right from just a quick glance at the data. Now, the other thing to look at is seasonality as a strategic hedge. So let's say that 70 to 90% of your trades in your portfolio, or maybe pure sentiment, momentum, maybe there's some other strategy that you're using, and that's maybe your bread and butter setup. But how about allocating 10 to 30% of your portfolio to just pure seasonal setups? Now that can give you systematic exposure to patterns that repeat every year. Think of it like this: you can hedge your intuition with data. You're not abandoning your style, you're just expanding your edge. And if you take a look here using Seasonax's filter function, you can search various indices. And if we look here at the Dow, we look over the last 10 years, and we have this time period from 61 to 90 days as we're approaching the fourth quarter. What do you see? Look at these stocks here that have winning 90% winning trade percentage. There's 3 of them: Salesforce, Microsoft, United Health Group, all have an 80% winning trade percentage. JP Morgan has 80%. Think of it like this: you're using seasonality as a hedge. So whatever your strategy, whether you're trading with Reddit threads, Twitter, Bloomberg, or your gut, Seasonax can help you trade smarter. You can validate your trades, hedge your ideas, and discover overlooked patterns that repeat with statistical reliability. Sign up here at Seasonax and you can get access to literally thousands of seasonal patterns that are just waiting to be revealed. Remember, don't just trade it, Seasonax it.